Welcome to today's morning report analysis videos on Monday 22nd of October with me, Richard Perry, market analyst at Hantec Markets. We've got a relatively positive outlook to European markets today. Now the key driver has been the fact that what we've seen is Italian bond yields have fallen away quite strongly, and that has come as ratings agency Moody's has given its update on the country's credit rating. And it's downgraded by one notch, but still remains just above junk status and has actually now got a stable outlook. So the markets have taken that as a reasonably positive outcome, really. Yield spreads between Italian and German debt back down at 295 basis points on the 10-year, and that is certainly helping to pull a little bit of euro outperformance today. But what we've generally got is a stronger dollar coming through. You can see that through the performance of dollar yen higher, cable lower, Aussie dollar lower, Kiwi dollar lower as well. So that's coming as we've sort of seen this move and the sustainable sort of move higher in treasury yields. We continue to see these yields sort of creeping higher over the course of the last week or so, having sort of corrected back. Interesting and that is a supportive factor for the dollar. It's certainly sort of filtering through into market moves today. You've seen the gold price, which is just slipping back a touch, just $3 down. It's basically consolidating around that 12.20 mark. But equity markets are benefiting from this improved sentiment. There are a couple of factors really within this. You've got the improved sentiment from Italy, but also the improved sentiment from China, where Chinese markets, look at that, 4% higher on the on the Shanghai composite there. So certainly filtering through into global markets from that move. But can this move be sustained? Because what we saw on Friday was the S&P 500. Yeah, it sort of got sold off into the close and again just crept a touch lower, unable to really sustain a move higher. So again, these question marks whether these markets are really now seeing this the outlook as being the glass half empty as rallies get sold into. So we've got a general outlook for just marginal dollar strength, nothing too decisive, but it has helped to stabilise the dollar index a touch today. And we're looking at no real data points on the agenda, on the economic calendar, and within that, to pushing on to my chart today, which is the Aussie yen. Now, I like to sort of look at Aussie yen quite often as a sort of a guide to market risk sentiment, and we can see that having broken below 80.50, that sort of turned the outlook negative again. And that 80.50 level, if you sort of focus on that as being a bit of a pivot in the having been supportive, it's become a bit of a pivot, hasn't it? Certainly in the last 2 months, where it became supportive, resistance, and is now once again, having broken to the downside, has become basis of resistance. And in the last sort of couple of weeks, it is the basis of resistance 80.50 to 80.60, capping the upside. And every time you do see that move to the upside, it sort of drifts off again. Now, if you see the market breaking through that would help to sort of generate, I think, an assessment that market risk appetite is improving near term. But the problem would be that there is still this sort of sequence of lower highs. So maybe that rally would probably fade in due course and market just drift back again. But you'd see a breakout above 80.60 as being an outlook changer on the near-term basis, but needs obviously probably above that 82.50 mark, the October high, to really start to improve on a more medium-term basis. But we can see that the market is consolidating still, edging a slight amount higher today. As I said, risk appetite is fairly positive today. The yen is under a little bit of corrective pressure. You can see the momentum indicators, which are sort of turning a corner, but they haven't yet crossed over in any meaningful way. A little bit of an uptick on the RSI, but stochastics and MACD lines showing little real drive forward quite yet. But as long as the market sort of continues to build above the 79 figure and 79.50 support, then we could see pressure on that 80.50 mark again, but that is the sort of near to medium term resistance overhead of that pivot now. So you'd need to break through that, as I said, to really sort of generate some upside momentum on a near-term basis. So I wish you good luck in your trading today, and I will speak to you later.